Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, December 17th. We got, again, this week is packed full of economic news that are going to be impactful of where we're going. And so we'll start off with the CPI, or the Consumer Price Index, for the month of November. This is inflationary numbers for the consumer level. So back in October, we had a pullback to minus 0.1%. And for the month of forecast for the month of November, it was supposed to go up 0.1%, and it actually came up 0. So in between, showing no jump. Now, when you strip out the food and energy, this is what the investors and what the Fed looks at, because of the volatility that the food and energy will create. So you get a lot of big swings in there. So for October, we had a 0.1% reporting. In November, the forecast is at 0.1%, and it jumped up to 0.2%. Now, extremely low for where the Fed likes it to be. It's at year over year 1.2. The Fed likes it closer to 2%. Still, with all the stimulus that they've been putting in there, which we'll touch on a little bit later on, it's still very, very low, and it even has concerns of possible deflation. So let's go ahead and take a look at the rest of the numbers here. And we have Home Builders Index for the month of December. This is the confidence level for the home builders, how they're viewing housing. So we had a 54, so anything above 50 is actually really good. We had a 54. The forecast is supposed to increase to 56, and it jumped all the way up to 58. So overall, good numbers there. Again, inflation's still extremely low right now. But good numbers from the Home Builders Index, so they're feeling good about the housing market. So we'll take a look here at the headline news, and currently the stock market is down, and we also got the FOMC beginning their meeting today. So remember, this is an important time here because it's the last before the end of the year. We've been getting a lot of good economic numbers coming or being reported. And a lot of the concerns here is with investors that they're going to stop or at least start their tapering perhaps after this meeting in December, because the news keeps coming out rather rosy. So, but more recent investors have been coming out that now they're figuring that maybe only about 10 to 11% of them feel that maybe they're going to begin the tapering, just because historically the quote is they don't like to really pull the punch bowl before at year end. So they think, if anything, it may be maybe beginning of next year you may see some tapering. But there are also a few people that think that maybe there might be a very modest taper to kind of experiment to see where things move with this meeting too. So tomorrow will be an extremely important day. It will be announced. Bernanke will give his announcement typically around 11 o'clock, 11:30 Pacific Standard Time. After the meeting. Later on, later in the month, we'll see the notes of that meeting. So we'll kind of see who and what was being said behind closed doors. But tomorrow will be extremely busy, volatile day, as you'll see probably, especially in the beginning, pricing kind of probably even worsening. It could get worse afterwards. It could improve afterwards. It's really going to be hard to say. So with that in mind, let's go ahead and take a look at the bond market, see what the rates are doing today. We are having an improvement with the stock market down. Some of the money is going into the bonds. We're up at 99.91, and which we closed at 99.72. So that gives us about 19 basis points improvement in our pricing today. All right, folks, thanks for watching. I hope you guys have a great day. And again, tomorrow will be the big day, so stay tuned for tomorrow. Thanks for watching.